Good morning, everybody. All right, I hope everyone's doing well. So I definitely want you guys to let me know how the quality looks. Tried to mess with the settings a little bit to reduce the latency or the lag, right? So let me know if the volume's okay. Let me know if the overall quality is okay as well. Oh, appreciate you, whoever just subscribed. And then Sam, appreciate you, brother. Yeah, let me know in the chat if the quality's okay and if you can hear me okay. And yeah, because of all the chaos happening, by the way, the uncertainty in the market, I'm not going to be taking trades pre-market like any time before the New York Open. I don't care if there's a news event. And we're going to be very cautious with what we decide to engage, just because there's just too much going on. You know, at any given moment, there could be huge gaps taking place. Like if, we drop a bomb or things get more dramatic and involved when it comes to the U.S. So, yeah. Again, let me know if everything looks okay, sounds okay in the chat. I kind of mess with the settings a little bit today. See if I can get less latency or lag between like what I say versus what you guys get. So yeah, let me know in the chat real quick. Straighten that out. Then we can get started. It's good so far? All right, perfect. All right, so obviously we just had news came out earlier, retail sales. Generally, things don't really do much around that time unless it's like dramatic, which you could see that it wasn't. But there's so many other things that overshadow what's happening in the market, much more than the retail sales. All right, so with that being said, if we go to the higher time frames, one thing I want to remind you guys of, if you guys trade the futures contracts, the actual futures contracts, we have now switched from June to September. Again, if you go to barchart.com, you can see with the process I told you guys about, I think on Sunday, where we look at the open interest between the different contracts to figure out when the actual time is the price will be changing from one quarter to the next. And we have arrived at that time. It's about that time, right? So you want to make sure you're using the real contract month, not the previous, because liquidity is different. Delivery could be a little different. And if you're trading, like actually engaging futures, you want to make sure you're using the actual contract month. You could use the continuous contract, which doesn't really need to be changed. It could just be continuous and you don't got to worry about it. But the problem is you'll miss certain things, like certain gaps, certain other pieces of price action that you probably don't want to miss. So you got to use the actual contract month. All right, so that being said, make sure you do that. But yeah, if we look at the yields, we're still overlapping, still doing a lot of work inside this volume imbalance. It hasn't changed from bullish to bearish yet, at least for the time being. I can say that if we get a displacement below this low, this wick would then be looked at as a particular resistance level, potentially, if it returns back into it. If that was the case, then we'd want to see how the midpoint's respected. How that would be respected if we were going to go lower would determine whether we're going to go lower significantly or not. Then, of course, this low, this consecutive down candle group, the volume imbalances in here, those things getting violated, you could start to calculate the 3 PD arrays. And again, the wick here, you'd have to see how it would behave. But for now, we want to see, is this wick just a retracement? This candle, did it just try to attempt to get into that range, that wick portion of the range, and then reject away? Because so far it still seems like that could be the case. We're going to have to just wait and see what happens with this, because again, it's overlapping. We're in a new quarter. We have FOMC at the end of the week, or federal funds rates too. So we got a lot going on, plus a news event, or a holiday happening on Thursday. So we have a lot of red flags, plus we have the stuff going off in the world, all these different chaotic situations. It's going to directly affect things like oil. Oil can directly affect the economy. If you guys have been looking at gold, any of the commodities, you could see what happens when war takes place. All the commodities start to explode. You could see oil exploding. You could see gold exploding. Very, very manipulated. And, it's just the way it is. So keep that in mind. So, yeah, we got the bonds also looking like they're still supportive of downside. Same thing, right? Just retraced. If it was to get above this wick here, we would be looking at that as a potential support level, and we'd have to see how that would be respected. We also got this weekly bearish order block midpoint, which has been holding in price and has been my line in the sand for the last couple weeks. So that's going to continue to remain the case. We have relative equal lows below here. So again, nothing's changed. Just like what we talked about on Sunday, nothing's changed. So what does that mean? Nothing changes. We're going to keep pressing into this potentially going lower, this potentially going higher until proven otherwise. That goes against a lot of the stuff we're seeing, at least for now, in the currencies and in the indices, right? So, and it's kind of going against what the DXY is doing too. We could see on the DXY, prices going lower, right? We still got the rejection levels in here. We got this wick. I'm watching the midpoint of that, seeing how it's being respected. Volume imbalance, order block. We have another wick in here that overlaps the larger one. So all these different levels in here, plus this wick here, I want to see how price behaves around those levels. If you were to break this into quadrants here too, you could see more near-term levels of potential reaction. You can also keep in mind what we talked about, or been talking about the last couple of weeks as a draw. We have the quarterly fair value gap. We have reached into it. It's pretty interesting how we've reached into it going into a new quarter. So whether that's going to be something that changes things in terms of like this now looking to go higher to give possibly a quarterly shift, obviously we're going to have to monitor that and see how that's going to work out for the next couple of weeks, especially with all this stuff happening. There's so much taking place. So yeah, it's my opinion on DXY. I'm going to look to see this continue to go lower, and targets remain the quadrants within this quarterly fair value gap, potentially this low. This is a daily chart, so each daily candle has a previous day's low. So previous day's low here, here, here. Previous week's high is up here, and previous week's low is down here too. So I'm going to mark off the previous week's low real quick. So we could use that as a possible target for today if we can get excited enough to get down there. So yeah, let's see, previous week's low. All right, and if we look at the 15-minute chart, actually let's look at the 1 hour. We can see this is the daily candle so far. That tells you that this is an indecision candle on the daily for now. If that continues, obviously we have a lot of overlapping candles here, overlapping on the daily. It has retraced, still structurally looks bearish, so we're going to stick to that, but you could see that the overlapping effect is making things a little more difficult to trade in. So when you see something like this, prices going sideways, we have an opinion on the higher time frame, which is still trying to see downside until proven otherwise. Our invalidation levels are the high here, the wick quadrants, the volume imbalance, this whole area in terms of the gap, and then we have this order block in the midpoint plus that weekly bearish wick on this weekly chart. So if we get displacement above those levels, there's no need or no interest for us to want to look to short. We then look to make an argument potentially for price to maybe seek this high. And then if this high gets taken, that's a shift after a raid on sell stops and 3 PD arrays violated on the higher time frame. So that would turn our attention to possibly seeking buy side, but that's obviously later on if that does take place. For now, if none of that stuff looks justified, which it doesn't so far, we're going to continue to want to seek sell side liquidity. Okay. So that is my opinion. Draw maybe the previous week's low. Before that, we have all these different previous day's lows here on its way to the previous week's low. That is potentially on its way to filling in the quarterly fair value gap entirely. So I'd like to see that eventually if this all continues. But again, we're sideways, so we got to stay flexible and keep in mind our invalidation levels, but still hold on to what the overall narrative has been, and that's bearish. Okay, until proven otherwise. All right, so I hope that makes sense. Moving on to the currents or the indices. If you look at the currencies, they're still overlapping too, but still looking like they want to go higher. We got an order block here; it's been respected, and we have monthly highs above us on the currencies as well. So I'm going to stick to that, thinking of power 3. Of course, we have a indecision week so far. This is the weekly candle, so we'll see if that changes moving forward. Quarterly fair value gap over here. Buy side liquidity is available. Could wick reach into this, then go. We still got the large wick up here, so we're going to watch that too. So if it retraces, that's still short term unless it starts really breaking down. And then, of course, we could then adjust to whatever's taking place at that time, if that happens. For now, though, we're going to continue to want to see price go higher, lower on the DXY. And this, we do have trendline liquidity down here. We do have relative equal lows here. Did pierce this a little bit. So we're going to have to wait and see what's going to take place. It is overlapping. We're in consolidation. Remember what I said, week before, week of, week after, a quarter swap going from one to the other generally can lead to harder conditions. You can see all of that opinion visually taking place right in front of your very eyes. Basically us gauging when price is going to slow down or not, and then when you should push or when you shouldn't, or how you should behave when we approach certain times of the year, like quarter swaps or new seasons like summer, the summer months. Okay, the summer months are generally harder, and you could see that beginning to take place here. But remember, small ranges lead to large ranges, so we'll see what happens as things progress. But again, this is a skill set you learn over time with experience, but because you're with someone that knows, that's observed this for years, in terms of the conditions in certain times of the year, how to behave around like the start of the week, start of the month, start of a new quarter, what you can anticipate going into those moments in price, moments in time. And again, you could just, you're able to basically gain that experience now. Because you guys have watched this occur. So I hope you have been taking notes. Okay. So yeah, situational awareness is critical, and that's something you get to see and gain experience off of by being here, aside from everything else. Okay. Just a reminder, if you guys like the content, if you get value from the things that I provide, definitely consider liking the video, subscribing if you haven't already. And if you have any friends that trade that you think can provide value or simply get value or would enjoy hanging out with us, definitely spread the word. I like having a tight-knit community, and you guys recommending the channel definitely achieves that goal. So thank you in advance. Appreciate you guys. But yeah, do you guys have any questions up until this point? I'm still going to look for this to go higher. We have this potential bullish order block. So let's see how that's going to behave, if it's going to behave. I called for Thursday's high in my private group. I sent out a markup. I think whoops, knocked that thing over. I sent out Thursday's high, Friday's high as a potential target near term, obviously. So we've seen that Friday's low, I believe, if I'm not mistaken. Yeah, Friday's low is here. I'm not sure why the Friday's low looks like it's way down there, because it's not. See, if I hover over this, it says Thursday. So yeah, it's kind of interesting. But yeah, Friday's low is here. We see that was purged here. Came all the way back up. Price came and swept out the Thursday's high from last week. Yeah, Thursday. So after we pierced that, we've now returned back into the range. So if we take a fib and we go from this high that took buy stops to this low that took sell stops, we can then get a accurate premium and discount based on this current time frame. And we could see how equilibrium's being utilized, and we've been bouncing around. We are now above the Sunday's open price here, also above the new week opening gap. We also got above this high after taking sell stops. So this could end up being a shift in market structure. This could end up turning into a significant fair value gap with an order block here too. So I want to see, can we end up getting continued displacement to maybe target previous day's high, which is up here. And you think of power 3. Let me get this up real quick. Previous day's high. So if we look at power 3, right, the open price, which I'm not sure why it's not showing. Open price. Okay, it's right there. So the open price is here. So notice the consolidation, drop below the open price, swept out sell side liquidity from previous day. Or it's from Asia. So this is like Asia's low. So we swept that out, and now price has gotten back above a swing high here. Just basically looks like a retracement. I can say that if we displace and get down back below this low, we may end up seeing price maybe fill in the rest of this gap down here that was not traded into so far. So that's available. We are above Sunday's open price, so it could be a bearish power 3. We'll have to just wait and see because we're consolidated. So I mean, it could do really whatever it wants. It could hang around. It could displace a little bit just to take out more sell side, just to go higher later, because the narrative doesn't change until things change on the higher time frame. So with that perspective, we're able to stick to the fact that we believe this is going to go higher unless we're proven otherwise, right? So any retracements won't fool you if you can get really comfortable with this perspective and way of doing analysis. So again, I would like to see us continue to march higher, but if we get a displacement that ends up really violating this liquidity pull down here, if we move up to the 1 hour, we also got this fair value gap to watch as well. So if it rejects, that's something it's rejecting from. And then again, if it was to violate this low, we would then have some more sell side to potentially target as a result of that. Right, so yeah. If we take it from this low to that high, there's also like a middle portion you could find, because this took sell side here, and then the high also took buy side here. But it's inside of a larger consolidation like we just talked about. But if all these levels get violated that I just mentioned, and then price gets back deeper into this and just shows no respect at all, like to this fair value gap too, then again, you can start to frame an idea and a bias to target the lows. But unless all that stuff takes place, we will continue to hold on to this assumption that it's potentially going to go higher. You can make an argument that this was a run on stops. shift in market structure, fair value gap. But again, you can't disregard the higher time frame narrative. This would not be valid for me just yet for short interest, simply because this could just be a retracement and the higher time frame does not support that. If you see something forming on, say, the 1 hour or the 15 or lower time frames and it's not supported by the higher time frame, there's a problem. Okay, so you want to make sure that the entries you engage, the biases that you come up with on the lower time frames are within the higher time frame narrative you're rooted in on that weekly, daily, right, monthly chart. Very important, right? Because you don't want to trade against the wave unless you know you're trading against the wave. Excuse me. Because if you know you're counter trend trading, you're able to navigate risk better, and you're just navigating things safely, and you won't hold so much longer than the minimums. Because if you're in a counter trend move, I've shown how to frame counter trend moves off of opposing PD arrays to the higher time frame if they're traded into. But again, it takes time to be comfortable. You're going against the grain, so at any moment it could turn on you. So you want to keep your amount of, like, your target amounts smaller. You want to make sure you're keeping in mind where it's reaching for. You want to keep in mind like the correlated assets, risk on, risk off, basically, right? And again, the higher time frame PD arrays, the price may be reaching into, could be a reason why you take a short and then all of a sudden it explodes against you, right? That could be a reason if you've been taking losses going against the trend. It could just be trading into something and then you're getting in the entry when it's about to take off the other way to get back in line with the higher time frame narrative, right? So yeah, that being said, we have price not really doing much at the moment. We're still just in this range from yesterday. So we're going to continue to watch. Let's see what happens in here. We've got this fair value gap I pointed out earlier. We are inside of a weekly fair value gap. We do have the regular trading hours gap that formed. So let's map out. Let's map out first presented. So this wouldn't be classified as a first presented fair value gap because it's using the 630 time. It has to be unattached to the 630 candle. It can't be the 630 candle. You can still look at it as a fair value gap, obviously, but it's not going to be the first one that we're looking for. See? It's just attached. We don't want that. For whatever reason, right? That's just kind of what we've seen through the concept being taught. So we're going to stick to that. Tuesday, first presented. So yeah, we're just stuck in the range. If we look at the 3 indices on the 1 hour, there's no S&T really. There, I guess you could argue that there is a small one here. This is just too messy for me to want to, throw anything out there in terms of opinions. I, of course, am sticking to the higher time frame. I would like to see it continue to go higher. We have previous week's high to attack, previous day's highs to attack, and prices basically came off of lows, rejected from those lows. Also actually has SMT here if you see the lows there going into the new week. Lower low, higher low. So the Nasdaq and the S&P are the strength holders behind the 3 indices, right? So the Dow is the weak holder, the weakest of the 3. So the most lethargic buy, if buys do take place, will happen in the Dow most likely. So yeah, with that being said, if you trade the indices, I don't recommend you trade the Dow at all. But if you trade the S&P or the Nasdaq, you know, whichever one has the failure swing here, if it's a bullish S&P, it sometimes is one, sometimes it's both. But when you have that, you know that if you are going to be correct in terms of buys, those two are going to be the strength holder, or you know, maybe the Nasdaq is the only one that has that. Then the Nasdaq, if you do your study, you'll see ends up being the strength or the stronger delivery. Right, so we're going to keep looking at this. This right here could end up being a run on stops, simple retracement, another run on stops here, break above the high. Let's see if we move up a little bit, if we could get a pattern I like. Looking for a breaker. I mean, you can make an argument about this here. Kind of sloppy. It's definitely inside of a range, so got to be a bit cautious. It's a little more protected right there. Just a high, low, higher high. We got a run on stops here within a narrative that's still bullish. Nothing's changed. A run on stops. We got a shift in market structure. And let's see if a fair value gap can form. And then, of course, we got the fair value gap in there too. So again, I'm favoring buy side. Previous day's high, most likely. Assuming that it's going to go up, right? It may not, because we're in consolidation ahead of FOMC, Fed fund rate, so on and so forth. So expect today to be a little bit more, you know, chaotic. Right, so yeah, let's see how this behaves. If we look at the highs real quick. Oh, here we go with the logging me out of my broker. So annoying. Better not do that again. Don't you guys hate that when it just continuously logs you out of your freaking broker when you're literally looking at the chart? It's like the most annoying thing. I would really like to see this be presented as a fake bull flag. I would really like that. Only way that I could determine that, though, or trust it for me personally, it's maybe different for someone else. But in order for me to gauge this as a fake bear flag or a bull flag, I need this thing to displace below the low. Because I mean, everybody's trying to buy. You know, you can imagine, you know, so you got to keep that opposing mindset. You can't be just married to buys, right? You got to be open to different things taking place. And we've already mapped out kind of what would turn us towards the other way, how we would be able to be flexible. Like what would that entail, right? To make us change or be flexible in our analysis. So, yeah. So, yeah, we'll see what happens. I'm going to still continue to favor buy side. So if you know, the run above this high can get more protracted and get above that, great. Because we've spent a lot of time below the open price here. We do have relative equal highs that we could target, previous week's highs, current week's highs, right? So, yeah, but we do have relative equal lows here. So again, if we were to break down below this low here, that would turn my attention to possibly attacking further to the downside. Oh wait, that's S&P, whoops. Yeah, so if we break this low, we want to see what's going to happen, because same as the S&P, we have relative equal lows down here. So yeah, let's see what happens. Gonna watch how DXY behaves in here. Remember what I mentioned at the start of the video about these different levels up here and how we're going to gauge whether it's going to continue to drop or if it's going to be time for us to adjust, which would then support this going lower, right? So here we're getting below this low. Let's see what happens in here. So you see how the breaker I outlined got disrespected. So now that's one red flag, one indication that we got to remain flexible. Only way that I would look to want to buy again is if we can get back above this high and present us with one of the models I like to operate within. For now, though, it looks like it's interested in potentially continuing to go lower. So this fair value gap overlap with this price delivery turns this upper portion into a balanced price range. Us violating the low down here should end up also leaving this whole entire range here as a balanced price range. So if it's going to continue to go lower, given buy side's taken, now sell side's taken, and we've overlapped price delivery, we should be able to continue to stay below the 50% level in here. It should not even have to come back into that, because why? This is a balanced price range. It should act as that if we're going to support price continuing to go lower and targeting these equal lows, right? So, yeah, it's going to be my opinion until proven otherwise in here, just because of what we've seen so far. So yeah, let's watch how the fair value gap in here acts. All right, so this will, if you look at this too, this is a breaker. These consecutive down candles, drag that over, possible bearish breaker. Okay, so let's see how that's going to behave in here. We're approaching the macro. We're not at the macro entirely yet, so I'm gonna, prefer to wait for the macro to fully be delivering inside of the 650 to 710 time window. But again, watch this as a potential breaker, right? The initial one that got above this high seems like it was just a run on stops, but we'll see. I can say that if we do displace again and end up getting above the 50% level here from this high to that low, that will still pique my interest to continue to support buy side, which is the initial idea of what we were looking at today. But given what we've seen here, we're considering the contingency plan to potentially go down here. And we have to consider either direction because we're in consolidation. There's too many things taking place for you to be like, yeah, 100%. We are 100% in a bullish narrative still, which is what we've been talking about, which is why I want to continue to try to support that if it can show us evidence. But again, there is a potential chance, given the fact that, we're in consolidation, that it may look to want to attempt to target a little bit of sell side near term to then set up further buy side liquidity targeting. I can say that if, again, we get above this midpoint and we get above this high, we can then use this overall delivery as a bullish breaker, right? Because we have a high, low, higher high, and then you can end up mapping out the potential bullish breaker, right? Again, for now, we're just in consolidation. There's nothing to fully engage in here. There's just really not much. It's just sideways. So fair value gap here. We're now trading through it again. Let's see how that behaves. If we get above that, plus trade above the midpoint of this, then potentially break this high up here. That's 3 levels of resistance that I wouldn't have wanted to see taken if we were going to look to go to the downside. All right, so watch this high too. So we're in a position of waiting right now. If price does this, then we will do this. Right? Notice how price got down below here. I mentioned that if it gets below here, we may have a chance to look for a potential drop. I don't like how price didn't close below that level. It just wicked below it. That tells me that there's a likelihood that this could just be a raid. And, if we continue pushing through these levels up here, then obviously that will have been the correct observation. Okay, so we're watching this here. So 1 minute fair value gap. Price did try to return back into the regular trading hours gap. If we go to the open price here, measure out the first 30 minutes. So it's our first 30 minutes of the overnight range. So let's see how if price breaks above the levels I just mentioned and we also get above this level, the first 30 minutes of the daily range, that's going to be a good indication that we may continue yet again to go higher. Right. So again, we're in an if-then observation mode right now. You know, if you're in here thinking, let me just take a trade, and you're just already 10 trades deep, I mean, you have no idea what the hell you're doing. Okay, and you're just gambling, and you will not find me doing that here. I will not encourage you to do that, and there's going to be in no way the idea that gambling is okay being presented with your time spent with me. Okay, I'm very responsible trader. I try to teach you guys to do the same, and I show you that rules, although you may miss trades sometimes, and being strict with your process, it may make you miss things and engage less. But you've probably heard the expression over and over that less is more, and until you gain experience, you're not going to appreciate that opinion. It took me 2.5 years to realize that, wait a minute, like they are onto something here, because if it takes you more than 2 trades to make something happen positively, there's something wrong. So less is more. So let's watch this here. It is a pretty decent response away from this. So again, the midpoint here is what I'm watching, plus the overnight first 30 minutes. If we stay below this and we stay below the open price from overnight, which is here, and then we also stay below the regular trading hours gap, we have now the first presented fair value gap that's available in here. Okay, let me actually, it's actually up here. So something I want you to watch and observe, right? If this order block here is going to be something significant, it will most likely not have to trade back into this fair value gap, because an order block is a balanced price range. Okay, a breaker is a balanced price range. It's creating these things, an overlapping fair value gap delivery, like if this gets above this, or like this, right? Price going up, then just closing in entirely, preferably overlapping candles. But those are all generally presented as balanced price ranges. So depending on the narrative you're operating within, one direction or the other is going to be continuing to print. In this case, if it was going to go higher, and this overlapping area in here is going to be a balanced price range, which again, I'm assuming it will be, this should not have to come back into here, right? And so we have this high to that low. You can take this consecutive up candles, use that as a potential breaker. Okay, so again, the bias or narrative overall has been bullish. It's still bullish. Even if price was going to try to dig a little bit deeper, like I mentioned earlier, wouldn't change my opinion unless something changes on the higher time frame. We are getting a little bit more of a excited price delivery here. Isn't it ironic that it happens at the 650 macro time window? We've now shifted above this high. If we are going to continue to be bullish here, I don't want to see us trade too intensely below this fair value gap in here. If I could find it. It is, dancing around a little bit, but I definitely don't want to see this low or this lower fair value gap here that's been overlapped already. I definitely don't want to see that traded within. If we're going to continue to have a healthy run higher here, and it's not going to just continue to chop around, that is going to be respected, and we should be able to see price go higher. So again, my intention is to try to see if there's any type of buy side that could be targeted. But again, I'm affording an allowance for price potentially wanting to seek sell side a bit more to set that up further to go higher yet again. Right? So because sometimes it'll dance around and do opposing things to what you're trying to see, but then eventually go in your direction. So you can't just disregard your bias or narrative just because the 1 minute bias, which in this case for a minute it was bearish, digging to the sell side, is going against the higher time frame. So again, my line in the sand for this particular move here, because we have run on stop, shift in market structure, fair value gap in there, I don't want to see this fair value gap get violated. That's going to help me trust or continue to trust the buy side is going to continue. You can make an argument about this particular point in price here. We do have buy side liquidity up here that I would really like to see targeted today. I think we contested the open price one more time, which we did here. And again, if we were to get down below this fair value gap in here, and so yeah, if we were to get below this and then break below this low here, and then stay below the regular trading hours gap, the first percent fair value gap, and the overnight first 30 minutes, again, those are all things working in your ability to frame out the narrative to target the downside and be flexible. But if it stays above these levels, then again, what's the reason you would want to look to short, given the narrative also is bullish, right? So these are hopefully some simplistic ways of viewing things, specific things in price action that are always there. I talk about these things all the time. This fair value gap should act as a BPR because it's got overlapping buy side and sell side in here. I mean, there's a lot of stuff happening in there anyway. So we'll see, right? But for this to be a move to go higher and to trust this area in price to continue to go to the buy side, we need to see that hold. And then if it doesn't, that's a good sign for us to then look to be flexible. You know, whether you're going to be comfortable with being flexible or not and trust yourself that you won't overtrade, obviously that's going to be a, individual process. But for now, I'm not personally too interested in engaging because we're still in this consolidation. But again, ideally, if this is going to go higher, which is what I would like to see, I would like to see it hold above this midpoint of this fair value gap. And then again, the invalidation levels are the things that I just mentioned. Okay, just a reminder for those that may have hopped on within the last hour or so. If you do get value from the content, definitely don't forget to subscribe to the channel so you don't miss my videos anymore. And you could always be on here getting these gems. Definitely don't forget to like the video as well if you get value. And definitely spread the word if you feel this content can help someone that you know that wants to be a good trader and be around those that prove that they know what's going on. Which here for the last 3 years, specifically in the last year, the evidence has been amazing. You see the delivery in here going right in hand, like hand in hand with what I just mentioned. And if this continues, again, it's going to continue to go higher. Because the levels I mentioned as invalidation haven't been broken, it's still remaining interested in going higher. So seeing this happen in here is hopefully, maybe some of the stuff doesn't fully make sense, but hopefully seeing this take place and me mentioning that I'm favoring buy side still in the face of price consolidating and doing this, hopefully it's motivating you and making you confident as far as the things that we talk about. And because, the stuff's repeatable. It's very black and white in many cases. Like this is black and white. If it was going to stay above this, it's going to go higher. If it gets down below, it's going to go lower, right? Morning, Maddie. I hope you're doing good. I'm logging off and saving month capital. Expect to seek and destroy. Yeah, for sure. Yeah, we've been mentioning seek and destroy, consolidation. That seems to be the case. Nothing in here except temptation. Yeah. Hey, Maddie, I'm extremely proud of you, bro. Good job. I like that mindset. So yeah, that's exactly what I tell you guys to do. It's exactly what ICT tells you to do. If you notice that there's a condition that you personally know is not good for you, then you make the simple decision, just get out. I have held back on an entry in here. I did mention, how we're going to navigate all this stuff. I don't really necessarily feel, too reluctant to take a trade. If something's there, I'm going to take it. I don't care if it's consolidation or not. But that's just the experience and the models that I have. I'm able to navigate almost every condition. Not every condition, but almost every condition. Because there's rules for certain things. Like for consolidation, there's rules. I look for market maker buy and sell models. This here, if you look at this on the seconds chart, this high, low, up above the high up here is a market maker buy model potentially supported by the overall analysis we've done. But it's just on like a 15-second chart, right? Consolidation, accumulation, reaccumulation, smart money reversal, first stage distribution, second stage distribution, aiming for the equal highs up here, right? So I didn't even have to go to the I haven't been on the seconds chart today, but just from what I saw in the 1 minute, I made that assumption. because I understand my models. I know what they look like across all time frames. And again, that's a level that you'll get to with your models as well. As you gain experience, which it's hopefully helpful by borrowing mine a little bit, and speeding things up for you. But yeah, you'll I want you guys to take what Maddie just said and think about it. He's in my private community. He's a great trader, and it's amazing to see him say those types of things, that he's willing to sit on the sideline and not have any fear or reluctancy to it, about that thinking. As you guys can see, the idea that I called out, which again, I don't give you signals, but I give you framework that you make your own decisions on. You could see that basically played out. Everything that I outlined has worked, and it's targeted buy-side liquidity. Very easily offering the 20 to 30 point minimum that we look to target on a daily basis, which we damn near fulfill on a daily basis, right? So, and then Sam, I just want to make sure I say thank you for the sub. Appreciate you. If I didn't say it earlier, can't remember if I did. Maybe I did. But yeah, we'll continue to just watch what's happening in here. Hopefully, everything I've talked about makes sense so far. And this fair value gap in here, we have a high, low, higher high. Hopefully, if it is going to continue to go higher, which I would like to see it do, we should stay above the wick, the overlapping fair value gap in here, right? This should be able to act as a balanced price range too. It's continuously creating balanced price ranges, but obviously you want to make sure you're inside the larger framework. You don't want to get thrown off with the statement I just made. But if an order block's created, if a breaker's created, if you could see those things, just remember those are balanced price ranges. That's why they should hold, and they're more effective when you're in line with the overall narrative. But if they don't hold, and like say the 50% levels get broken of a breaker or an order block, that's the same type of rule as a balanced price range being disrespected to the midpoint. If a balanced price range is going to be respected, notice the midpoint of even a balanced fair value gap should be respected too, right? Let alone an order block or some other form of a balanced price range, which there are like a handful. I mentioned a couple of them today and taught about them, I believe maybe 2 weeks ago, a week ago. If you've never dug into balanced price ranges, I highly suggest you do some research on them related to ICT concepts, okay, not some other random person who claims they know, but when they don't. Right, so yeah, let's see what happens. If this fair value gap can be traded back through once more, I would then look to see that as a potential support level. You could see the deeper tracements in here. This is indicative, especially inside of the consolidation, but it's indicative of high resistance. Okay, overlapping higher time frame candles, high resistance. All the news events that are taking place and the way price has been behaving, high resistance. Deep retracements, high resistance. Cracks in correlation, high resistance. If you can get a lot of those things coupled on top of one another, what is the condition you're trading in? High resistance. When you're able to see these things, what does that allow you to do? That allows you to manage your risk properly, right? Which is a lot. There's a lot of things I've been mentioning related to that, like conditional awareness and what leads to what type of conditions and how you need to behave, how you need to manage your risk. So again, I hope those of you that have been with me for a while or hopping on recently a lot, hopefully are taking notes when I mention these types of things, because again, you want to know when to push, when not to push, right? Part of that has to do with anticipating or identifying what condition we're trading within, right? So yeah, but when things are looking smooth, like opening up in terms of candles, higher time frame levels are being met, PD arrays are being met in line with your overall narrative, correlations in play, just overall like liquidity is attacking, or things are attacking equal highs and lows. Very simply, previous days highs and lows are being targeted continuously with little effort. Price is just expanding. Obviously, you're in high probability, low resistance conditions, which is the best times to trade. It doesn't happen every single day, you know. It happens, you know, a couple times a month. That high probability, low resistance delivery will take place, you know, a couple times a month, in terms of like, you know, big price delivery moves. You know, there's something to find every day though. Look, like this here that I just pointed out, that was something for you to consider studying. And the streak continues. You know, I've lost count of how many live calls we've had straight where I've been able to point out a profitable move. You know, and you could put 2 and 2 together. You know, you don't have to, you know, overthink things. Right. So yeah, has everybody been safe this morning? Hopefully none of you guys overtraded. Has everything made sense? Just let me know in the chat. See, I'm still favoring what I've initially talked about. We're just inside of a consolidation now. Right, so if we go, let's move up a little bit, get a feel for some of the upper time frame. Whew, look at that big old order block there on this 5-minute. Huge order block, beautiful. Again, so if this just respects the midpoint and just continues to stay above the upper portion of this order block, again, this should act as a balanced price range. It should be able to hold above this middle portion of this order block. And we also have a fair value gap in here too as an inversion. So, and then the other things that I've mentioned that have been supporting me pushing price to the buy side. Right, so if all that stuff stays intact, what is the purpose in you looking to try to find a short and go against the grain? There's no need. Narrative is still bullish. You know, it's just been a little chaotic, but the narrative is still bullish. So there's nothing to change. You continue to hold on to a narrative or direction until physically proven otherwise, which you can use a 3 PDA rule and some of the other things that we talk about, which I won't get too deep into today, right? So, but the 3 PDA rule is pretty self-explanatory, hopefully. And hopefully you guys that have been here for a while, that have been seeing me apply this and teach you how to do it, teach you how to use it and show you evidence that it's impactful. Hopefully you've been using it and getting some nice results, or at least some good experience using it, you know. So we're going to continue. Look at the first presented for value gap, right? Let's see if we could continue to march on higher. We are in high resistance, but that doesn't mean we can't gauge where price is going to go. Clearly, we called out this opportunity here, went right to target, stopped a little bit before the target that I would have much rather preferred. But nonetheless, I tell you guys and encourage you guys and prove to you guys that 20 to 30 points is, you know, very reasonable. You can do it on a daily basis, which I do here on YouTube every single week. But in my private community, they see it every single day that we go live. There's something I point out that could work out. Now, whether it lines up with you or not, obviously, is personal. So you're going to have to, you know, argue about that with yourself. You know, but you know, there may be many opportunities that get pointed out, but you only need one that fits your model. You know, the other ones could act as supporting ideas. You know, like breakers. Maybe you don't use breakers. Maybe you use optimal trade and tree. Well, okay, this low to that high, targeting previous day's high, which I believe is up here. No, it's, what is that? Well, that's London's high. Well, yeah, I mean, optimal trade and tree looking to target London's high, London's low, previous day's highs and lows. You know, maybe that's something that you resonate with more versus like a breaker, right? That, oh, whoops. Where the hell did it go? So look, if that's the case and you like, say, optimal trade and tree, you know, this low to that high, get you down to the optimal trade and tree with the fair value gap. Maybe you like that over the breaker. That's fine. But just because you use one model and you can see another doesn't mean you have to just use that one model. You could use the other models that you're able to identify as a supporting idea, like in this case, right? This is a breaker, also a bullish order block, also an optimal trading tree, right? Also a balanced price range, inversion fair value gap model, right? So you could see multiple models that I have outlined here, but all that is underneath the umbrella of the analysis we did, trying to gauge why price is going to go in one direction or the other. What I just mentioned right there is extremely, extremely powerful. It may go over some of your guys' heads, but I mean, it's just, you take all the things that we talk about and what I just mentioned to you, and I mean, you have a superb, dynamic, unrivaled way of doing things, and with multiple different opinions that could lead you to very similar objectives, very easy I've outlined targeting today, right? Just simply aiming for London's high, London's low, previous day's highs and lows. I just showed you how you could map out using the same framework, which we've been talking about to go higher. You could frame out multiple different models. An inversion fair value gap after a run on stops. After a run on stops, you can get the breaker, right? You can get the YouTube model here. That's what this is as well. But also overlapping that is an optimal trading tree, right? Aiming for, in this case, London's high, maybe even eventually previous day's high, which is what I would like to see. Whoops. Pretty spectacular that things played out yet again. I mean, nobody can argue what it is that we do here anymore. You can just simply watch the replay videos and watch me call it every single day. It's not an understatement because I'm doing it like in front of people, which quite honestly surprises me too. Like, how did this just happen? Like, it didn't really just happen, right? It's been 6 years in the making, lots of every single day. I don't think I've taken a day off aside from this year when I started taking Saturdays off in 6 years. It's missed a lot of things, lots of sacrifices, but given the way things have been going, I mean, given the fact that students that have learned from me are just progressing more than I ever thought they would, I mean, it's all worth it. Every single struggle has been worth it, and it'll be the same for you. And I hope you guys get value from being here and enjoy it as much as I enjoy being here with you guys. But yeah, full target has been met. Idea that I shared with price going higher, invalidation levels that were there, held up, and then the full delivery has been met based on the ideas that I mentioned. So this being used as a balanced price range, aka an inversion fair value gap after a run on stops, shift in market structure. That's a model, by the way, if you're wondering. And we got the first presented fair value gap. We got the overnight first 30 minutes and everything else that we've talked about, plus an SMT at the lows, I believe. Yeah, SMT at the lows here between the S&P and the Nasdaq. And again, it's just led to continued buy side because the narrative is bullish. I did have a consideration for if this was going to hold, to possibly look to target this low down here. That didn't work out, right? I didn't assume that was going to work out, right? We were waiting. I even mentioned it. We were in a mode of waiting, and the price ended up getting above here. And I mentioned that this is probably going to be a good idea to get above the high. So we're going to have to see how this behaves. Once it got above that, I said, continue to watch the first presented fair value gap, see how that delivers from this high to that low. If it could stay above the midpoint, it did. It just wicked through it, and now prices delivered once more pretty rapidly to the buy side. So again, for those that may have just hopped on, this is an opportunity we narrated, called out ahead of time, and the whole process leading up into that, I will encourage you to go back and watch the replay. But yeah, hopefully all this stuff has been helpful to you, and you could see even in hard conditions, yet again, the streak continues, and we're able to identify opportunities very consistently. Right? Now again, whether this aligns with your model, I showed you all the models, all the different entry models that are inside this piece of price action here. I hope it shows you how everything overlaps in many cases. A lot of times there will be multiple entry tactics in the same place, which is the weirdest thing, you know. But I guess because people have different perspectives, people are just different, they see things differently. Multiple different models leading to a very similar outcome or place in price delivery, gives you a little bit of a flexibility to pick which one makes more sense. Maybe the optimal trade entry made more sense. Maybe the inversion fair value gap balanced price range idea made sense. Maybe the breaker made sense, right? Maybe the optimal, did I say optimal trade entry? Maybe the optimal trade entry made sense. Maybe this with an SMT and a turtle soup made sense, right? More sense to you, right? Regardless of which one aligns with your perspective and what you see in price, you could see that it brings you to a very similar outcome, you know? And I also talked about the market maker buy model, right? Go to the 15-second. This was a market maker buy model. So that even further supported the fact that this is going to go higher. Okay? And just put another layer of context behind this delivery being trusted to break above the highs, which is what I mentioned. You know, we were still one-sided looking for buys the whole time. But of course, we had to afford an allocation for being flexible. And we waited up until we saw how price delivered in here, and then that was a time when we were able to commit the opinion that price was going to seek this high up here, which I had outlined again before the fact. Okay, so again, I hope all this stuff has made sense. Not everything's going to stick right away. Okay, but it's very important that you guys ask questions so then I can get a feel for where everyone's at. Because if you guys are here, I'm assuming that you want to learn. I'm assuming that you need some guidance on something, or just some clarity on something, or maybe you're just hanging out, right, to hang out, which I appreciate, right, if that's the case. But those of you that do come here to try to get insight and try to get assistance from me, or just try to gain experience from what it is that you see, if there's ever something that doesn't make sense to you, please ask. No questions are stupid. Anyone that gets disrespectful will be blocked. Okay, I don't give a shit. Okay, I'm here to help. I'm not here to entertain losers. Okay, so with that being said, hopefully, that makes you guys feel comfortable to ask questions. To know that no question's dumb. I will see every question, and I will answer every question to the best of my ability. All right, so yeah, one thing I do want you guys to look at, like I mentioned earlier. One of my private community students said something. I just pinned the message in the chat. He used to have a lot of trouble over trading. He used to have a lot of different issues that most traders face. And, part of the solution was to limit the amount of trades he takes. And by watching me perform the way that I perform, and watching and hearing the perspectives that I give, and, just the results that come as a result of the things I do, he was able to submit to the fact that, yeah, it's totally fine to do 1 to 2 trades a day. Yeah, it's totally fine, and I don't need to argue about anything if there's a day that I choose to sit out. I will always find something the next day, or the next day, or whichever day comes next, right? There's always going to be an opportunity. I show it regularly in my private community. Every single day I show that you have no reason to be upset about missing a trade. Okay, you have no reason to be upset about losing a trade. You have no reason to be upset if there's something that doesn't make sense on a particular day, because there will always be something for you to engage, and the things that we operate within, the things that I showcase, show you that there's always something to engage that is a high likelihood of delivering. Okay, but it takes a lot of, obviously, different elements, and you practicing and seeing it shown in real time, and then obviously being able to ask questions and whatnot, in order for you to be able to really master it. You could do it on your own. There's a saying, you can go farther on your own, but you can go farther together. So we can go farther on our own, but we can go much further in terms of impact and, just simply your personal learning if we do everything together as a family. So just think about that. So keep in mind what I just pinned. If you struggle with over trading and over leveraging, you're in the right place, and just listen to good advice. and you'll have nothing to worry about. Okay, because I mean, if you just look at the videos from previously from the last year or so, or if you just simply hop on for the next month or two, or even like a week, you'll see that I mean it's insane what we do here. It really is. It's not to toot my own horn, but I see a lot of people on social media that can't do half the stuff that we do, just in terms of forecasting the market. And if you could forecast the market and you master yourself, you could put two and two together. What can be the result? But this ain't financial advice. Let me just pop this up real quick. I forgot to do it earlier. Right. So yeah. So let's see what happens as a result of this wick in here. So I'm going to move this fib, move it up to there. So now we're going to watch this wick overlapping the fair value gap. If it's going to continue to go higher, it's going to have to hold that and support that as a balanced price range, because that's another form of a balanced price range. So I hope you guys have been taking notes. So the balanced price range idea is something that I generally like to, keep stored away for students that prove they're serious. A lot of you guys that are on here, though, are regular supporters, so figured I would start to mention a little bit more than normal about that topic, because that topic and a handful of others can change everything. Market maker models. What do you think a market maker buy and sell model is when it completes? It's a balanced price range, right? A little conspiracy theory, right? So yeah, let's continue to watch this here. Okay, I'm going to see if there isn't something we could maybe get a grasp on in here. So yeah, we got this wick in here. I do feel I'm a little bit reluctant to try to push anything after this, just simply because we're still in consolidation. DXY is now running higher, right? It is kind of giving us a slight movement to the buy side. I would have liked to see this break down for me to really trust the potential for a bigger expansion in the indices. I'm still supporting the fact that we're going to go higher unless proven otherwise. We have this fair value gap, we have the wick, and now we have this swing low. So the only time that I would be considering going short is if we were to break down below this swing low, because that's 3 PD arrays. All right, and then again, this low to the buy side up here, right? So this high to that low, this should act as a balanced price range. Isn't it ironic that that balanced price range gets invalidated once it breaks down below the 3 PD arrays I just mentioned? All right, things are all connected, and it all aligns amazingly once you start to understand what's really going on, which you get to see on a regular basis. The actual, actual effective analysis process and just overall trading system. So yeah, I'm watching the midpoint of the wick there. I'm keeping tabs on the balanced price range. This will be my buy side invalidation. So as long as we stay above the buy invalidation level in here, I will continue to want to stalk buy side delivery. And whatever model choose to operate within, obviously is going to be subjective. Okay, so keep that in mind. But yeah, until this is proven otherwise, what proves it otherwise? Us breaking down below this area, I'm going to continue to support the upside. Okay, so let's see if I'm right. First target has been hit, London's high. I talk about previous day's highs and lows, London's highs and lows, previous week's highs and lows, month's highs and lows, session highs and lows, which is what London's high and low is. I talk about those as targets, as setup liquidity. That whole list I generally call liquidity mapping, because we're mapping out important liquidity pools that get targeted regularly. One or a couple of them get targeted regularly, and they're significant roles in the daily and weekly ranges. they play significant roles. So you could see this played a significant role, right? It ran up, took out London's high, right, as a target early on. What else we could see? London's lows down here. Hasn't really been engaged, but we're still in consolidation, right? It hasn't really decided to overwhelmingly do one thing or another. We have supported the buy side narrative because of the higher time frame. This is just a beautiful example of being rooted in the higher time frame, allowing you to get in line with the proper moves, even from the seconds chart or the 1 minute. Some people say the higher time frame don't matter because it takes so long. They're idiots. Okay, don't listen to them. If you've taken that bad advice, I suggest you start to make that adjustment. Start using the daily at least. Because you're trading blind, in my opinion, if you're not. So yeah, let's see what's going on in the chat. All right, so let's see what happens below this low. So similar to how I talked about this over here, how it ran the low here, gave a shift in market structure here. We're going to watch this here. If it's going to go higher and you want to operate within the YouTube model, for example, in the form of continuation, well, you would see this retracement here. You see how price is already delivered. You see that, price could still want to run to the buy side. If all that stays intact and you're looking to get back into the marketplace, you just reset the rules. In this case, let's use the YouTube model for an example. This decline below this low, if it is going to get higher and there's going to be something worthwhile to buy in a continuation variation, we're going to have to see a run on stops, shift in market structure above a swing high, and then a fair value gap form, and then we could end up looking to engage. Excuse me. Otherwise, right, there's nothing for us to look to engage. Keep in mind this wick that I mentioned. We're still watching that. And then again, the invalidation levels down here for any type of buy given the current price delivery. Right, so it's definitely interesting how this is a strength holder. I mean, I guess it was, right? It started out super aggressive. But it's kind of interesting how the Dow is moving faster than the S&P and the Nasdaq at the moment. But look at how much of a mess this is, right? So again, I've showed you from today and multiple other occasions previously that you could still frame out a reasonable idea in a shitty environment, right? But you got to be very cautious. You have to be very understanding of what's happening. And if you do take a loss, you stop. You don't go in again. And, we're also kind of looking at a scenario where we may have a setup form in the form of a continuation variation, specifically highlighting the YouTube model because obviously it's, the most popular right now. I did show you inside this price delivery 4 different models you could have utilized within the same price delivery that would bring you to the same conclusion but get you in at different entry points. Doesn't matter which one works with you. What matters is the one that works with you, and if there's another one that makes sense too, you could use it as a supporting idea if it's secondary to your initial idea. But again, in this case, in terms of continuation, if something has already delivered and you have a target, like say the previous day's high up here, that you are confident it's going to trade into, once you see price start to deliver and you're now looking to try to get back into the marketplace, you want to reset the rules. Go to the 1 minute, reset the rules within the context of that delivery you're already working within. In this case, it's going higher. So for me to look to try to get in again, price would have to continue. It would have to do what it's done here. Break this, preferably close above this upper wick. Leave the low down here intact, but sweep this low, shift above this swing high up here, turn this into an inversion fair value gap, and then of course create another fair value gap, and then retrace into it, then deliver. And that would be the time when I would then try to get into the market again within this specific structure. If not, right, say price breaks down and breaks down below this buy side or sell side buy invalidation level down here that we've talked about. Say it gets down below all three of the regular trading hours gap, the overnight first 30 minutes, and the first presented fair value gap while breaking this low. If it does that, then I just do the same thing, but going to the sell side. I'd start to favor us potentially looking to seek a little bit of sell side for the moment, not forgetting that we're still inside of a buy side narrative, because if it kicks back in, we want to be able to be flexible and adjust with the trend. But say price was to break down below here and break this low, right? Well, if it does that, I'd like to see price try to retrace again. Whoops. So this is a quick example of what would happen if it was to go lower. Say it breaks down below this low, right? I would like to see it maybe create another swing high, run that swing high, create something like this, then I would be able to get in again. And if it does that and I miss it, maybe it does the same thing again, right? And then you can catch it as a continuation. This can be a breaker. It could be a YouTube model. Sometimes, there's the YouTube model that forms in the upper portion of a bearish breaker before it fully creates itself. But this phenomenon happens over and over and over, right? It happens over and over and over again. Like inside this price delivery in here, if I was to go to the 5 second, 15 second, it's creating multiple models within this price delivery, within the larger market maker buy model I painted out. It's a very advanced view of the fractal nature and price, but it's a testament to the fact that you don't have to worry about missing a setup, because you can always find one, right? Based on the logic I just shared with you. So let's see if price can get up above this swing high here. Let's see if it can use that as a shift in market structure and do exactly what I just mentioned, assuming that it's going to continue to want to go higher. And then of course we're watching the low down here to gauge if we have to be flexible or not, and the wick too. Notice how we're staying above that. All right, we got buy side up here. Where is it at? Am I tripping right now? I can't find buy side. There it is. So yeah, we got this target up here. Let's see what happens. We can get a projection. We can go from this low to that high. Somewhere within the half standard deviation projection to the full 1 standard deviation. I think that's reasonable. I don't think it's asking for too much. But with DXY going higher like this, it could be a problem. So there's a crack in correlation. Crack in correlation, overall consolidation. We're ahead of FOMC, federal fund rate. Wars are breaking out everywhere. We're inside of a higher time frame weekly fair value gap that's clearly been holding price. Again, we're range bound. All these things give you evidence that price is in a high resistance environment. But again, that shouldn't make you fearful. It should make you adjust your risk. That's simply all you should be thinking about, and everything else stays the same. How we determine bias, how we determine narrative, what we're targeting, why we're targeting them, the model we use, in many cases, should stay the same. But there's specific models like the market maker buy and sell model that are good in consolidation. The YouTube model is pretty decent too, because it forms almost every time price does a turning point. Breakers, right? I've outlined a breaker today. High, low, higher, high. This up delivery in here is acting right now as a bullish breaker. So again, instead of taking that, I'm going to wait for a shift above this and maybe a fair value gap that forms. I can say also that if we get above this high here, we could then look at this break above this high as a particular or a potential balanced price range. See, so this stuff is continuously rolling on and is continuously being monitored, right? These things are continuously happening, but all of this is encapsulated inside my understanding of the higher time frame. So that's why I'm able to stick to one particular direction and navigate the stuff regularly and know when it's time to be flexible versus when it's time to continue to push, right? So yeah, it's just overall testament to my analysis. You know, I'm able to sit here and make it seem easy because of my overall experience over the years applying this. I've done this for about 3.5 years. This overall process I have currently, it's been the same since 3.5 years ago. I learned it fairly quickly, but I honed it over the years, and now we've had maybe 3 days where we've gotten direction wrong. Maybe 5 losses on the year so far. Otherwise, it's just been missed moves. Like this here, I missed this today. I didn't engage. Is what it is. I could have obviously engaged. I mentioned that this is going to be a good opportunity to go higher. I just decided not to, because I don't have to take a trade today. I want to see what the damage is going to be today, how we're going to set up for tomorrow, and then how we're going to set up after tomorrow, what's going to happen as a result of this quarterly adjustment. So you see the DXY rallying here. We see this displacement now below this swing low. We are inside this order block here, so let's see what happens. Again, this low being violated here is not at all what I would like to see. And I would then use that to start considering the fact that we have purged buy side a bit. So now London's high was taken. It may be using this liquidity to pair them up with a short idea to try to then come back down and sweep these guys out. You can see seek and destroy right here, right? Throughout the whole daily range, we have one extreme taking out the lows, one extreme blowing out the highs, returning right back to equilibrium. Right? Equilibrium being from this low to that high based on the range from overnight. So we're right at the middle almost of the overnight. We're above still a bit in the premium. But again, price is just hanging around in here. So again, just like how I was thinking over here, for me to want to buy, I would have needed prices shift above there, then present my model. I need the same thing to happen here now. This decline here, if I'm going to trust it, it's going to buy again. If I'm going to stick to trying to buy in this current price delivery and not look to aim for a short idea, I'm going to need to shift above here and present another fair value gap to commit to the buy side liquidity. Otherwise, if this low breaks here, I may be able to act flexible or begin acting flexible and then try to seek sell side liquidity, maybe this low, while keeping in mind the fact that we're in a seek and destroy profile. We are in a harder to trade environment. The wick here, as you can see, has also been violated. But the middle portion you can see was used as an inversion, so it used that to displace lower. This is a typical thing too. But again, if we break this low down here, if a sell idea is going to be considered, which it's seeming more and more likely that it will be, potentially, at least for a framework. If we break down below this, I would then try to see the same thing take place. I need the run-on stops, shift in market structure, and then a fair value gap, like I showed earlier. I can say that if we get below this fair value gap here, I'm going to use that similar to how I used it over here for a buy-side delivery. I could then try to use that as a potential indicator for sell-side delivery. We also have this fair value gap in here too. Here, let me kind of move this over a little bit. This is the first 30 minutes of the overnight range of the daily range. So from the open price on the daily, 30 minutes out, that range, high to low, you drag that all the way across, especially when you're in consolidation. It's especially powerful in consolidation to help determine which direction price is going to run to, at least for the daily range. And then again, you guys see me use it a lot for trending environments too. It's not generally highly recommended, but it's helpful in terms of gauging or stacking confluence, very easy confluence when you're trying to support a particular narrative. So regular trading hours gap, first presented fair value gap in the first 30 minutes of the overnight range. If we stay below those levels, we're very much interested in continuing to march lower. If we stay above it, or above all three of those levels, generally we're very interested in looking for buy side. And if you go back and study this, you'll see it is shockingly helpful, right? And it's only three elements, and they're pretty simple to add on top of everything else that we talk about. Right? But again, for those that may have hopped on late, we talked about some moves already. Talked about this buy framing out here using the balanced price range, optimal trade entry, bullish breaker, and did I say balanced price range? But balanced price range inversion for value gap models as well. So, 1, 2, 3, and then the YouTube model, four different models that you could have used inside here. And if you want to get real ballsy, you could have thought you could have got ballsy and thought turtle soup as well. Because look, remember what I said about balanced price ranges? Okay, we got this down movement overlapped by the buy side delivery. Measure that out, should act as a BPR as well, right? If you're going to be bullish, notice how price never even attempted to get back into that, right? You could even go as far as, this high to that low with the overlapping fair value gaps. You could just see it. It's all over the place. You'll never be able to unsee it when you think about this like this, right? And then look at that. When it respects that and it holds that, what is the reason for you to doubt it? Especially if the higher time frame shows structurally that it's bullish. There's no reason, right? So what happened? It continued to run up, and then it formed itself again in here, balanced price range, gave an opportunity to go up. So again, if it starts to break down and breaks below that low and gets below these areas I've mentioned that should hold if we're going to go higher, we would then look to try to frame the downside, right? And that's all short term because the buy side is the narrative. So that's the longer term view of what price is trying to do. But bias sometimes can go against it to do things like this, like retrace, stop people out to set up the further buy. It can consolidate inside of a larger time frame PD array, like the weekly fair value gap we're inside of right now. And yeah. So yeah, I hope that makes sense. So I'm going to just continue to wait right here. Again, we have our levels and scenarios that will then push us into wanting to look for a short. I'm not interested in that currently. DXY is making me a bit lenient to want to maybe find some type of short if we could break this low. But for now, still going to look at this. I think we still got a lot of. I mean, there's a pretty there's a cracking correlation in here. We do have relative equal highs that were left up here in the S&P. That's kind of interesting. You can notice too the delivery into this fair value gap. Notice how every single one of them delivered in. Not one of them has failed. The S&P somewhat failed. I think it reached into it very, very slightly though. But yeah, if there's like a delivery like this, like fair value gap we're looking to deliver to, and one of the three fails to get into that, that's a type of SMT for those that don't know. Or if there's an order block on all three of them, but only one is able to tap into it, but the other ones fail, or two of them tap into it and one fails, that's an SMT at that PD array. And price will generally reverse from that, right? So just another little nugget for those of you that may have not known that about SMT. It's not only from highs and lows. It's also when you're trading into a PD array across correlated assets. And if one fails, or if two fail and one hits it, or one hits it and or two hit it and then one fails, whatever cracking correlation you see at a PD array, if that takes place and you see price reverse, that's an SMT. It's a signature showing SMT. Right, so yeah. So again, we're still holding on to our buy side invalidation level, or sell side buy invalidation level. Okay, so we got this is an 8-minute order block here. So we got a little bit bigger time frame context versus the 5. So let's continue to see what happens. If that's going to be an order block, again, it should not break through the mid portion from that high to that low that created the bullish order block. From here, this high, down to the low. So we have this buy invalidation level here, right? There's no buys in here at all that I'd be taking anyway until we get a shift again. just simply because we've traded up to here. DXY is rallying, which goes against buys, and we have this strong retracement. So I needed to punch higher again, maybe overlap this fair value gap, give us the same phenomenon, and then we could continue to march higher with price as it chooses to deliver to the buy side, if it does choose to do so. So I hope what I've mentioned today has been clicking and making sense in terms of analyzing real-time price delivery, spotting balanced price ranges. Haven't went too deep into it, but I hope the gist of the overall idea has made sense. How a new way that you, or not a new way, but a way that most people don't use fair value gaps is looking at them from that context, and then studying and seeing how much clarity you can build as you watch price overlap certain fair value gaps, overlap order blocks, how they trade within those levels, and then what that translates into the chart, how you can validate also by using those principles, because it's a big part of the confidence that I have is that process that I just shared with you today, some of the different elements. So obviously deeper levels we can go, but hopefully you guys can grasp onto that and see how helpful it is. Those are some of the pieces of information that I tell students, and it changes rapidly for them. So hopefully it can do the same for you guys that may have not heard it. So yeah, we got this displacement now. Let's see what happens. Remember, I'm looking for the YouTube model. So we have this up here that I wanted to see broken earlier, but we now have this one in here. Can't tell if this is going to, yeah, so we got the bonds pretty strongly trying to reach down. We're still overlapping, so it's kind of useless to use those. DXY is really accelerating to the buy side, very much cracked in correlation. So any type of entry will automatically, well, we started the day or week with half risk. If you haven't cut it to half risk, maybe you only cut it to a 0.25% less than your normal risk, like 0.75%. At this moment, given what we've been seeing, you'd have to cut your risk by even further. So you'd preferably be at half risk. If you started at half risk during the day or during the week, because that's just where you start at half of 1%, then you should cut it to a quarter. Especially if you're learning, just learning, and you haven't been able to have a profitable day or week yet, I suggest that you cut it even further. So yeah, let's see what happens here. It's giving me the displacement that I wanted. Hasn't really returned to anything in here. It's overlapping this, so let's see. See how it's going to behave with this. If it's going to go higher, it's going to have to respect this. It's going to have to hold on to this and continue to march to the buy side. So you do what you will with that information. All right, give me 1 second. I gotta go grab something real quick. Give me 1 second. Appreciate y'all waiting for me real quick. Straighten this out. Yeah, it doesn't look like I missed much. But yeah, still watching this potential inversion. Let's see what happens in here. But yeah, let me know in the chat, you guys, if there's anything in particular that you're able to take away from today so far, that you feel was the most like an aha moment, or you know, something that maybe you want to see me talk about more. And yeah, and maybe also put in the chat how long you have been watching the channel. You know, whether it's like your first time or whether you've been here for like a couple months or so, and how your experience has been. So let me know some of that stuff in the chat if you guys could. Would appreciate it. Yeah, let's see what happens in here. So yeah, let's see. Let's go to the 3 indices real quick. Tyler, you're my brother, yo. Dude. Yeah, it's only been 4 or 5 months for you, yeah. Yeah, yo, you're my brother, yo. You've been with me for years. But yeah, trading, you've only been really rocking with it for about 4 or 5 months. So yeah, and you're doing pretty amazing. Like a lot of you guys are. Maddie being one of them. Tony being one of them. Joe Wezzy, from what I've been hearing, has been doing pretty amazing. I do have a student named Nutty Fafa that I haven't seen in a while. I think I gotta go check up on him. He's one of the YouTube family. I got tons of people in my private community that are just absolutely insane. But yeah. So I mean, if you just look in here, it's a mess. Anything outside of what I've talked about today, the thing that I pointed out, I mean, it's a mess. You know, highly likely that people would have hurt themselves, and you know. So I'd like to see what's gonna happen in here. Just clean it up a little bit. So again, it just looks like we've accumulated, and now we've displaced, shifted market structure. This large wick in here, right? You can also look at that, break it through the midpoint, see if we could stay above that. And again, that mid portion is somewhere around here, right? And you just take my annotations and the things I've talked about. There's a lot of things converging within this portion, from the high up here down to the low, let alone the breaker, let alone the order block, let alone the balanced price range in here. There's that large wick overnight first 30 minutes. So again, if we could just stay above that and maybe get a displacement up here, this is not enough for me. You know, I mean, it is a fair value gap. It is trading into it. Maybe that does set up the run higher. But we're inside the macro too. So if we can get another displacement, you know, we may be able to use these consecutive down candles as a support level, possible area to possibly look to engage with, depending on your model. and then just, if that was to take place, and we look like we want to slide up to the buy side, again, we can have this stuff behind us as support and invalidation levels if they were to be targeted. We are still inside this order block here I showed earlier. This is an 8-minute order block. It's also 10-minute. And more importantly, though, it's a 15-minute wick midpoint. Right, so again, it may look like it has a pretty strong likelihood to be bearish on that 1 minute. Maybe it does sometimes look like that. But when you move up and you see things like the 15-minute showing that it's clearly still not fully committed to doing the opposing view, right? In this case, to go lower instead of higher. If it's not fully obvious that that's what it wants to do and it's just hanging around like this, you don't want to switch your overall opinion. It's pretty interesting how is that the time? Wait. Oh, so 8:30 is right there. Okay. But yeah, I was looking at this like, wait a minute, what's happening? I don't know why this indicator has this outlined as New York Open. It's not New York Open. That's the bond market open. New York opens an hour later. It's at 6:30. It's over here. So the 6:30 open was down here. Yeah, I don't know why that's there. I don't know how to turn it off. Interesting. All right, so we're now looking to contest the low over here that we were talking about earlier. So let's see. There's nothing in here telling me to buy at the moment. If it would have gotten up here, that's when my argument would have been, okay, let's try to catch a continuation to the buy side. But now there's not really much supporting. It's actually overlapping this fair value gap and this one going back below. Notice how the midpoint of that was respected. Look how perfect that is. It's not random. That's absolutely perfect. So we'll see what happens here, right? We've now hit this. Let's see if it closes below the buy invalidation level. And if it does do that, and then we can end up getting below this fair value gap in here, if we can get price to return back into that, that's a scenario that I would then look to possibly engage a short. Notice how I'm demanding a whole lot because we started with the initial idea to want to go higher, which it did do, and we painted out the move to go higher. Now I'm telling you when I will feel comfortable with taking a short. If a short is presented, this could simply be a run on stops because it didn't close below it. And, this, again, could just simply sweep that. And if it was to get back above this again, right, breaking above this high, getting above this fair value gap in here and this one, that's when I would then look to want to buy again. Right, so this is how I navigate consolidations and try to identify when a particular idea, could take place in either direction. But of course, I want to see or prefer to see something that supports us going higher because it has to do with the higher time frame narrative, which is the main objective. That's what I want to see price get in line with. You know what I mean? So unless it does that, unless it gets up here and starts supporting that again, I'm not going to look to try to push any type of buy. I'm not going to pick this as a bottom, even though it could turn into that. You could make an argument that this here was a run on stops, strong shift in market structure below the low here. This could be a potential bearish breaker. This is also a YouTube model, right? I personally want to see a little bit more. That may turn into me missing this as an opportunity to go short, right? But I personally need to see a little bit more. I'm willing to let this one go if it does deliver from there. And then I'll just get in at a different level down here. Right? Use this inversion fair value gap. And any other order block that may form inside of that as well. I could use that as resistance too. If it looks like it wants to confirm by breaking down through these levels to then try to attack sell side. We're inside of a macro too, so we're in a good time to see price want to go lower or make a move lower or higher. We are back inside equilibrium, right? From this high to that low, came all the way back down to a discount based on that range, which we've just been dancing inside of since overnight. Just a massive consolidation. So yeah. See what happens with this fair value gap in here. Notice a quick response away from this. The lack of closure below the low. It does not make me very confident that this is going to continue to drop, which is why I'm not willing to try to engage this as a short. So look, there's that fair value gap. All right, so let's see. It's still inside the bullish order block I highlighted earlier too on that 8-minute. So it's still delivering within that context. So this big order block potentially here, if it was to close below that, that would be something very interesting, you know, coupled with these other lower levels to then try to catch a short. If we can also see price go higher in the DXY. Right? So let's watch how this fair value gets respected or not respected. This here too, first presented fair value gap. Keep banging into the mic, whoops. So you see the daily candle in here? This is an indecision candle, which Seek and Destroy thrives in. Right, Seek and Destroy creates this type of higher time frame candle. This is a low probability candle because it hasn't decided to do much. But again, I showed throughout the session that there's ways to frame things out even when things are a little chaotic. So yeah, for me to buy, it's going to have to get up here. Otherwise, I'm just sitting on my hands for now. But yeah, I appreciate you guys hanging out with me today. Much appreciated. And I hope you guys have gotten value, the ones that have been with me since the start of the call. Lots of important stuff. Lots of critical, very dynamic things we talked about today. Some of the stuff may have went over your head, and you know it's to be expected, especially if you're still just in a mode of gaining experience, you know. But hopefully the stuff was easy enough to comprehend, right? Because this stuff happens all the time. So yeah, we're watching this fair value gap in here. I'm watching this swing high. See if we can't get displacement above that. Yeah, very lethargic. Seek and Destroy profile today. Still inside the 750 macro. Okay, that's nice. I like that. Now we have overlapped this fair value gap. So if it's going to go higher, it's going to have to stay above that. We're also above this one now, so I need to stay above that. Run on stops, shift in market structure. Let's see if a fair value gap can form in here, which can set up a potential move simply to get up above the high up here. Sorry, my dog's losing his mind. Sorry about that. So yeah, we should be able to have this as a breakaway gap, in all honesty. Should be able to just break away from this because of the balanced price range logic that's encapsulated in here. It could do a little bit of a dance in there, but most of it should be left open if it's going to go higher. Right. So yeah, if it doesn't, right, just stays stuck in here, it's just going to stay stuck. Right. So again, shorts have not been fully of interest much at all the way up until this point, and the fact it didn't close below made me think about waiting. I gotta wait. I'm watching this fair value gap in here. Let's see how the delivery is. So yeah, I like the displacement in the DXY. We'll see if there's something that can be observed here. We got a decent amount of stuff backing up this idea too. So let's see if we can't get something to deliver. But yeah, ideally this is a scenario I would like to see price go higher, just given all the stuff we've talked about. And yeah, above the first presented fair value gap, order block on the 8-minute, 10-minute time frame. So higher time frame narratives bullish. We swept the lows, failed to continue to get down there. Go from this high to that low. We couldn't even get to the midpoint of that. I think it came right to the midpoint. Actually, go from this high to that low. Yeah, it came right to the midpoint. It must be random, right? But as long as it stays above that, it should act as a balanced price range. Should be a valid balanced price range. And we should still be able to get it up here. This is a beautiful potential scenario in here. Similar to how I observed over here. Yeah, we'll see if that wants to continue. Everything else is in line. Nothing's cracked in correlation, really. At least for the indices themselves. It's peaked above a high right now. So yeah, 30 points will get you up there. We'll see if it has enough juice to get up there. And 20 points is simply right above there. Invalidation for this, if this was an idea you chose to participate in or study, would be the low of the fair value gap in here. That's supported by all the things that we've talked about today. Right, so the fair value gap, this fair value gap, this fair value gap, the balanced price range idea, the run-on stops. We have the first presented fair value gap supporting it. Again, we are in a consolidation, so it could end up being just stuck and not want to do nothing, because tomorrow is going to be a massive, massive day. I'm not going to be able to participate in it because I don't trade the PM session. But I'm going to go into tomorrow expecting that it's going to be kind of a chaotic mess, to be honest. I think it's going to really not do much. This whole delivery that we're seeing here, assuming that it may get stuck, I think 20 points should be able to get achieved here. But assuming that this is going to continue sideways in anticipation for tomorrow, AM session may be a little hectic tomorrow, right? Maybe a little bit of a dumpster fire, because it's going to wait. It's going to anticipate what's going to happen for the 3 massive news events that are coming out. Well, we've had a chance to get 17 there. Very slow delivery. It's going to make you really work for it if it does choose to get up there. But yeah, 30 is just like right below the high up there. Pretty amazing, huh? Like, I called this one to go higher. I said I didn't want to take a short in here. I called out this as a potential buy. Looks like 20 is just got fulfilled right there. Yep, 20 points. Pretty amazing. 2-0 today. You know, let alone the past like couple months. And this happens on a regular basis. I mean, I don't know how many times I got to do it to, you know, I don't know how many times I got to do it to provide clarity with the fact that what we do here is unrivaled. You know, but you know, I'm never gonna convince anybody. Never gonna persuade them. You know, if the chart can't do that, then so be it. There's a bunch of idiots that they can go watch do absolutely nothing. You know, while we are over here doing this type of stuff on a regular basis. But yeah, so boom. I think 30 was actually just presented there too. Again, I called this in the moment, just like I did over here. You know, you have to make your own decisions. You know, I'm not going to put you in trades. It's not my job. My job is to get you to try to learn. And hopefully today was a profitable learning experience. If you sat back and just watched this play out, hopefully you see why this played out and the levels and context that I outlined that would have helped me trust getting into this trade idea. Right? So yeah, what a magnificent delivery and price. Yet again. And the streak continues per usual. Okay, so the two opportunities that were called out this morning was one in here. Then I call one inside this particular level. Same principle, right? Fair value gap here holding as a balanced price range. Fair value gap here and here holding as a balanced price range. You could see the very strong similarities. 30 points was offered on both. Much more than 30. Well, not much more in the other one. It may end up being much more. But much more. Very tiny stop. Less than 10 points. Could have been conservative, put 16. But nonetheless, 30, 30. Right? So again, the streak continues yet again and again and again, and it's going to continue. And you guys that stick around here, you're going to have no choice but to have this experience bleed off onto you in some way or form, you know. So, and a lot of you guys have seen that taking place recently. So good job in terms of listening and applying what you guys are learning, because I mean, it's blatantly obvious. You don't need to see my bank account to put 2 and 2 together. Right? I mean, just think about it, right? And most of you guys that are here that stick around long throughout all these long videos, because we have so much to cover, you notice it. It's very blatantly obvious. It's like, it must have a crystal ball. I must be getting super lucky, you know, whatever the case may be. But I don't know, whatever people want to rationalize it as, right? Or you could simply just look at it as there's a skill set here that's able to be passed on, and spend time really learning this stuff, and just keep showing up, and it will, again, bleed onto you. It's going to have no other option. You know, greatness, success breeds success. You know, so if you're around successful experiences, successful people, positive experiences, positive people, you're going to have no choice but to, you know, have that become a part of you. You know, so with that being said, guys, full target's been met that I outlined earlier. Full target here was met too, so 2-0. The streak continues, and I just want to say thank you guys for spending time with me. Hope you guys have been getting value over the last 6 months. And those of you that are new, hopefully you've gotten the value that you've came to the channel to receive. You know, and if you're in my private community, you know the vibes, right? We'll be live again tomorrow, and the next day, and the next day. Those of you that don't know, or potentially don't know, I have a private community. We go live pretty much every day except Saturday because that's my day off. This year I've made that my day off. But if you want more support, if you need more of a hand holding, more access type of vibe, you want to be around traders that were just like you until they showed up here and started crushing it as a result of their time here. Definitely go check the link in the bio. If it doesn't work, DM me on Instagram so I could send you a link that does work. If sometimes it doesn't work. But yeah, if that's something you want to be a participant in, it's always available. Otherwise, I'll see you guys every Sunday, every Tuesday, unless something happens. And for my private community, you know the vibes. I'll see you tomorrow and the rest of the week, as always. And if you guys got questions, let me know. Definitely don't forget to like the video, subscribe to the channel if you haven't already. Share the channel with any trader friend that you think can gain value or provide value to the community. And, let's keep growing together and continue to be amazing. All right. So yeah, God bless each and every one of you. Happy late Father's Day for those of you that have a kid or plan to have a kid. Happy almost Father's Day, right? But yeah, thanks again, you guys, and I'll catch you all in the next one. God bless.